Well, with that, we'll open it up for questions from the audience.
Boy, we're that good.
Yeah,
I
apparently.
guess we've answered them all. Yeah, Bill.
One question, I guess, directed to Randall, is within the application process, particularly in rural counties, the HHI definitions get very restrictive and very concentrated markets that prohibit in-market mergers. Is there any interest in changing that analytical approach, and particularly some of the market definitions?
Yeah, so we're looking at that, but I'll say it's probably early days in terms of looking at it. But one of the things that we're going to do is we're going to probably reorganize how the different people in the Fed actually do applications, M&A applications. So right now we actually rely on the Supervision and Regulation Division actually relies on another division to do the HHI. Now we're actually going to get those economists in SNR, and we're going to start looking at whether we look more at alternative lenders as well as part of the competition. Look at credit unions, non-bank lenders, and so forth to try to have a more meaningful and accurate application of the real competitive environment. I think that should help.
Thank you. Like, for example, farm credit in the rural space and so on and so forth.
Question in the back.
This is Charles Z. from ICBA, and I just want to thank Randy for the shout out, and I look forward to working with you on all the reg relief items that you listed.
So I have a question for Ilaria. A lot of times we hear part of the decision between starting de novo is it's either that or actually acquire a charter. Can you talk a little bit about kind of how you thought about that decision?
I think in our case, and it was probably relatively isolated, is we had a team familiar with the de novo process and felt really comfortable with moving forward as a de novo, wanting to kind of start out on our own. There also weren't necessarily attractive charters kind of in the area where we felt comfortable acquiring at that point. Sorry.
Any other questions?
Can I mention one thing before we rest? So if you're going to read two things, if you're a community banker, I would suggest two things. One would just not even be on your radar screen. One is get on the weekly newsletter of a guy named Tom Brown of Second Curve Capital. You may or may not know him. He's currently holding a CEO conference in Chicago that I went to for the first time last year, and I've had they're great. Actually, specifically, if you're not on, ask for Last Fridays, because it actually talks about, he gives some examples for why focused strategy and strong execution will beat scale every time, which I think is important, and it was a very good thing. And then the second one, which came to mind only because of Tom's newsletter, is a book called Competing Against Luck. It was written by the late Clayton Christensen, who was a professor at Harvard Business School for a number of years. If you've ever heard phrases like disruptive technology or innovator's dilemma, those were his inventions, and that's how he became even more famous. And probably famous, he could do sort of whatever he wanted at Harvard because of that. He was on the cover of Forbes, Fortune, all that stuff. But he found that his theory of disruptive technology helped him explain why really good companies failed, because they didn't see disruptive technology coming up from over on the side like AI or things like that. But all it did was it showed correlation. It didn't really show causation. So he then developed something called the theory of jobs to be done, which is what causes someone to buy your good or service. And one of his things is that aggregated data doesn't tell you that. You've actually got to really dig down deeper. Things that community banks can actually do that big banks don't pay attention to. And so I urge you to buy his book on competing against it. Most of the examples are non-financial, but you'll see the relevance to, I think, your own business models and how you can actually compete very effectively against even banks of much bigger scale.
I will second the Tom Brown reference.
Okay.
He's excellent stuff. So, well, Leslie, Ilaria, David, and Randy, thank you all very much for being here. Really insightful comments, and appreciate the time you gave us today. Thank you.